Hey, what is going on? So I presented this last week to a group of investors and they found it extremely helpful. So thought I would share it with you. I'm not going to make it as long. So if you want all the slides, it's in the description and happy to share more if you have questions. But the bottom line is there is a lot of bad information out there, misleading information, and so, in the back of your mind, I want you to just remember uh, two things. So, in this video, I'm going to share what those two things are, as well as at the end of the video, I'm going to break down specific things that you can do right now, as well as long term. So, with that, let's get started here. So, the first graph I want to share with you is this one right here. This one. So this isn't we're in a recession. Like there's no doubt about that. The official definition of a recession is that um, it's 2 quarters or more of negative GDP. Well, the first quarter was negative GDP, and I'm almost positive this second quarter is going to be officially labeled or the official kind of come out numbers with negative GDP. So we'll officially be in a recession. I won't get into it completely, but I kind of think we're going to be in what's called a stagnation. So I'll probably do another video on that, which means it's just going to be a very prolonged period of essentially low unemployment. And yeah, it's not going to be great. But bottom line is there's two things I want to really point out. The first is this graph, and as you can see here, anytime we're nearing a recession, what the Fed does is they drop the interest rates, and what that does is as they drop the interest rates, it stimulates the economy, and the economy recovers from that recession. So it happened throughout history. It's really cool looking at this graph. So every gray line here, this line, these gray lines are the recessions in the US history. And you can see, boom, hit a recession, lower the interest rate, and we recover. So it happens again and again and again and again and again and again. And coming here to 2008, the Great Recession, or it's called the Great Global, what is it called? It's GFC, so Global Financial Crisis. We hit the big market crash and they lowered the interest rates. We didn't recover. Remember, this is the second longest recession in recorded history. And so what did they do? They actually dropped them all the way down to zero. Like, we have to recover. And we eventually did, right? With 0% interest rates. So they finally started raising it, and we hit the COVID 2020. So the Fed freaked out, and what did they do? They dropped it right back down to zero, saying, "Hey, we gotta recover." And what they then did is they've just recently started raising those interest rates. The problem is right now we're about to hit another recession, and there's nowhere for the Fed to drop the interest rate. So remember that. And the second thing I want you to remember is this graph. This is the monetary base, meaning essentially how much money is in, I don't want to say circulation, but it's how much money is in the economy. And what's crazy is to recover from the 2008 recession, what the Fed did is they printed it, essentially it's called quantitative easing, and it's not exactly printing, and that's a whole nother video, but it's essentially they give the banks the ability to make as much money as they want. It's really wild. But at the end of the day, yeah, we just produced or create money out of thin air, and a whole lot of it. So as you can see, made $1 trillion, and we never really recovered from this recession, but that's another story. But essentially, we keep making more and more money. And then, as you can see here, during the COVID 2020, we created a stupid amount of money. And so, right now, The reason the home prices have just been skyrocketing, there's a lot of misinformation out there that it's because of lack of supply, that it's because there's a lack of home inventory. Well, because of a lack of building, right? We're millions of homes short on building new homes. Well, that's only partially true. A much, much, much greater reason for the low inventory is because of all of the demand for the properties. The demand is out of the roof because of this graph right here, because there is so much money in the economy that it is just driving up the assets, i.e., homes, driving that up. And what better time to buy than now with 0% or almost low, I did a 2.5% 30-year fix. I mean, it's crazy. So bottom line is we're going to be in for a long haul. It's not going to get pretty anytime soon. Will home prices stagnate? Absolutely, for at least a little bit. Likely, what's going to happen is the Fed's going to try to dump more money into the economy, but that's only going to work so long. So, yeah, I'm not even going to talk about inflation right now, which is um, I want to keep this video short. So, um, here really what I want to get to for you. Here are the actual next steps that you can do. And as a real estate investor, remember that a recession doesn't necessarily mean home prices are going to be crashing. So if you're sitting on the sideline waiting for that, there's history has shown that that doesn't necessarily mean recession, doesn't necessarily mean home prices will crash. And in this time, I really don't think there will be a home price crash. Um, Leading indicators to watch if you want to keep watching and seeing what home prices are going to be doing in the very short term. I would look on Redfin. They have some really great data. Just go to Redfin data and you can track that quite well. The next thing I would do is master sub two. And I don't mean just understand how to do sub two and how to do owner financing. I better go back a few slides to explain this in a little bit more detail. The reason this is so important is that with these rising interest rates, so the Fed will likely continue to raise these interest rates short term. If you understand the value of a lower interest rate, so here's an example I drew up was say somebody only has a fixed $1,500 a month mortgage. Before, they could afford a $455,000 house. Today, they can only afford a $300,000 house. It just in this 3%, what is it, from 2.5 to 6%. So understanding that and the value that you can capture by getting a low interest rate by doing purchasing the home sub two or with seller financing is absolutely key. So I do not have a course to sell, but I will likely find somebody that I can recommend and paste a link in this video so that you can go and absolutely master that. The next couple things that I think you should do short term is understanding your local market. So some markets are cyclical, some are linear, meaning certain markets like Los Angeles, Miami have these crazy ups and downs. Those are not markets you necessarily want to be in right now if you're flipping and doing other type of investments. Versus a linear, they do go down, but they're relatively flat and don't take those wild swings. Um, Other things I wanted to talk about was uh, understanding everything is local. And I thought a good example of this was here in Atlanta, Georgia. If you look at the Atlanta, Georgia map, the four center counties, Cobb, Fulton, Clayton, and I don't know how to say that one, all lost population, while all these counties around all grew in population. So you might think, oh, Atlanta is a great place to go into, but understand, get local, because it does come down to picking the right market in this next upcoming few years or forever. So long term, here's what I think you should do. Understand that with these crazy inflation rates, and inflation is not going to go down anytime soon because of the graph I showed you about all the monetary money that's in the in the U.S. right now. Um, so you're losing essentially 8.5% of your money every year. And understanding what that means of saying, okay, if I have $100,000 in cash this year in my bank account, I mean, just really understand that, because once you do, it's you really don't want to have cash. The next thing is sorry, I was just looking at how long this video is. I'm going to wrap this up. Two is watch Ray Dalio's Principle of a Changing World Order. It'll change your view on everything. Absolutely cannot recommend that enough. Get debt that is pays itself off. So, for example, I would not buy land right now with debt, because especially if we're going into a recession where and with inflation going up, that's a horrible idea, because yeah, I won't go into it. So buy properties that cash flow. No matter what you do, make sure it cash flows, but if you can get it to cash flow, buy it. And then the other last thing I would say is we're going to go through some tough times, so make sure you understand the red states versus a blue state, and pick a state that lines up with your political views, because that's going to play a huge part the next couple of years. All right, if you found this video helpful, please give it a thumbs up and subscribe. I plan on producing a whole lot more in the next couple of months, just to keep you all very informed.